Ladies and gentlemen, welcome to Walk the Block, episode number 2, where we are continuing to navigate digital finance. I'm your host for the evening, Zenith, and I'm joined by the team. First up, we have Agent J. How you doing, buddy?
Dude, I'm doing fantastic. It's good to be back after one hell of a December, both in the crypto markets and obviously it was the holidays. Spent a lot of time with the family. It's definitely good to be back where I feel the most at home and where I do my best work, which is on stream with you gentlemen and with the rest of the community, man. Because let me tell you, I know the holidays are supposed to be a time to relax, but my personality, when I'm not working, bro, I get very anxious and I get very antsy. So like here is where I am the most calm. So I'm glad
Fair
to be
enough.
back. It's good to see
like
you,
it.
gentlemen.
I think we do very fine work here as well. Speaking of which, man who dresses very fine, we got Dace Northall. How you doing, buddy?
I'm well, sir. I'm well. I would echo Jay's sentiment. December was probably the biggest and busiest month of the year for me in my work. And so I'm excited to get back to a little bit of routine and especially excited to continue this new routine here with you guys.
Love it. And beyond the horizons, scanning the distant future and the charts, we have Tracker. How we doing, my man?
Doing well, Zenith. Welcome back, guys. I'm glad to get back on here again. It's kind of funny. I think we're all very similar, anxious during the holidays. It was fun, hang out with fam and kind of reset. You almost have to, it's harder for myself to reset and just relax at times. 2-3 days, no problem. But when it goes on for like a week or so, then it starts to get, like Jay said, very antsy. So I'm very happy to get back to the grind of things and start streamlining some of the processes we're trying to do for everybody. And very excited for 2025 because we have a lot of stuff cooking in the kitchen for a lot of people. So this is going to be fun.
True. And I know you've been doing a lot of work behind the scenes, getting our website ready for launch. I believe it's already live, but there will be future updates coming. So be on the lookout for that, folks.
It is
Alrighty.
live.
There you go. Alrighty, folks. Well, as you can tell by the crystal ball background, yes, we are doing our quarter one of 2025 Outlook show, trying to read the tea leaves, search the chicken entrails, if you will, and understand and try to predict what's going to be going down from both the crypto market aspect and also the macroeconomic aspect, because over here we believe that those two are pretty much intertwined. So tonight we're going to start it off with a bit of technical analysis. We're going to look at Bitcoin, which Jay and I believe just made a very important move, or rather we got confirmation of a move that happened about a week ago. We're going to be looking at Ethereum. We're going to be looking at how both of those and their ETFs are doing, and if there are any additional tokens that you, the people, would like to see us do a quick analysis on, go ahead and put it in the chats and we will get to it. After that, we're going to check in with our boy Jerome Powell at the head of the head of the not the SEC, the Federal Reserve, excuse me. Yes, we have some clips from his last press conference. I know a lot of people were saying Jerome Powell spoiled Christmas, but I think he actually provided some good insight about the future, and I believe that press conference is actually rather relevant to Q1. And then finally, we're going to wrap up the show with a few news articles and a quick calendar rundown about all of the macroeconomic events that are going to be coming down the pike in quarter one of 2025. So we're looking at unemployment rates, inflation data, CPI is inflation data, and all the different Federal Reserve meetings along the way, and any major crypto events that are scheduled. So with that being said, Mr. Agent J, if you wouldn't mind pulling up the old charts, let's get it going.
Yes, sir. Give me 1 second here to pull up my Bitcoin chart. Let me know if you guys can see that.
We have you.
All right.
Yes, you can.
Let me go ahead and full screen this sucker. Let me see if that. Oh,
Very nice.
I don't like full. Never mind. I'm not gonna full screen it.
It fills our screen very nicely.
When I full screen this thing, it takes out my tab that you guys see here on the left hand side. On the right hand side of my How do I zoom out? Let me reset chart view. Nope, that's not it. How do I stop full screening? It disappeared. Okay, this is why I don't like full screening it.
Maybe F11?
I was going to say F11 and see what happens.
Okay, let's see. F11. Where is my... Okay, there we go. Dude, what the heck's going on?
If it didn't fix it, you'll want to hit it again.
saw RSI get pulled up there for 1 second.
Yeah, give me a second here, guys. Sorry, gang. Troubleshooting here.
All good. We do a live. Boop.
Okay, I'm going to try and reshare it one more time. Give me 1 second. Still full screen?
It's still full screened. Are you satisfied
I'm
with
going
your experience?
I'm going to reload it, and hopefully that fixes it. Okay, there you go.
All right.
Jeez, that was one hell. What the heck? Okay, so like I was saying, if I full screen it, my tab here disappears, and this has all of my chicken scratch, right? Because I like to keep a very clean chart. So if I can't pull these things up, then I can't show you any of my analysis.
True.
Okay, so Bitcoin. Let's go over the 60-day cycles to start off, right? We are currently on day number 8. We are, I would say personally, that we are in a new 60-day cycle with a high actually here on day number 8. We had our cycle low here on day number 56. And because we took our last swing high here back in the 26th of December, this is making me extremely confident that we are indeed in a new 60-day cycle. So where are we looking at in terms of time for this thing to finish? So within the month of January, day 30 puts us at about the tail end on the 29th, and then to finish off, if we were to get a traditional 60-day cycles, which would average 60 days, it's going to put us at the very tail end of February. So last week of February at February 28th. So what can we expect in terms of price action for Bitcoin? Well, as always, we're going to do both the bullish and the bearish scenarios for you folks. Since Zenith alluded to it earlier, and he said that Jerome Powell basically killed Christmas, and he didn't exactly kill the Christmas pump, right? However, I think that the pump that we had during the month of December became a lot more muted than what I think everybody was expecting. I'm gonna go on record here and say that I was indeed wrong about the entire Q4 of last year being all green, because December did close red. So this time it was different. It was the first time during a halving year that Bitcoin closed the month of December red. There's a first time for everything, and it happened then. But a lot of things during 2024 were different, right? We had a new all-time high before the halving. We had the month of September close green on us, which traditionally closes red during a halving year, right? And it closed green. So there were a lot of things during the year of 2024 that was different, and it just happened to be one of those things, right? And so what can we expect here for 2025 to start off, right? And really, what can we expect for the remainder of Q1? Well, excuse me. Well, as always, we're going to go over a little bit of Elliott wave analysis. So just to zoom out, right? Let's go ahead and start off with, as always, the weekly view, right? I like to give folks a very 20,000 foot view, up in the air look into the market, because people tend to have recency bias. And by recency bias, they like to look at price action that happened within just a day. And you can get lost in the daily price action and actually miss the overall trend, the overall prevailing trend that we've had basically for the entire bull market, which is up and to the right. So just a little bit of a review here. Let me go ahead and clean this chart up a little bit. All right. So like we've been mentioning in the community Telegram, and then obviously in our other analysis, if you watched our shows over at the VGen Roundtable, you know that we are playing with two scenarios here for this current full year cycle, right? We have a traditional 5-wave impulse here, right? Completing, so here's the thing, right? The two scenarios that we've been playing around with is a traditional 5-wave impulse that if it were to happen, this would put us, right? This would finish this wave 5 somewhere at the tail end of Q1, early Q2 of this year, right? Which would give us a truncated bull market in terms of time. Now, structurally speaking, it falls right in line with how you would analyze each of these legs of the Elliott wave impulse, right? And so, in that sense, it makes complete sense, right? However, in terms of time, that would be the first time that we would have a very truncated bull market in terms of time, right? Instead of ending at the tail end of the post-halving year, right, sometime in late Q3, early Q4, you would look at the end of our bull market during late Q1, early Q2 of this year, right? If that were to happen, what can we expect in terms of price? Well, if you take a fib extension, right, taken from the very start of our move here, right, from the bottom of our 2022 bear market, and you take it to the top of your wave 3, to the bottom of your wave 4, you can see here that we've already hit the very common fib extension targets for our wave 5, right? We were expecting a minimum of the 382 at 90,000, which we already hit. And then a very common extension for wave 5 extends all the way up into the 0.618 fib extension, right? Which is that $130,500 Bitcoin, right? So if we were to get a truncated bull market in terms of time, I am expecting in terms of price, right, for the remainder of quarter 1 to take us to about $130,000 Bitcoin. Now, what if we are playing with the other scenario, right, which is a double 1-2 pattern, right? And a double 1-2, right, your green 1 and 2 are already in, and what we are experiencing right now is the green, the final leg of our green wave 3, right? Double 1-2 because you have a green 1-2 already complete, and then you have a red 1 and red 2 already finished, and then you're waiting for your red 3, 4, and 5 to come in, right? And so what can we expect in terms of price for this quarter if we were going to go with the double 1-2 scenario? Now, because of time, right? In terms of time, when you make a time-based analysis, this is actually the scenario that I much more favor, right? And I think everybody else in crypto Twitter and everybody invested in crypto is actually probably also going to want this scenario to play out, right? And so what can we expect in terms of price for the remainder of Q1 if we are in this scenario? Well, the end of our green wave 3 takes us to a minimum target of about $147,000 Bitcoin, right? Obviously, it can extend as high as that 1.618, which would take us at a close to $300,000 Bitcoin. However, that seems unlikely for this cycle. Unlikely, but not, outside the realm of possibility, right? Because a lot of things happen in this cycle that nobody expected. And so am I going to put it past Bitcoin for us to get up to $300,000 before the end of this wave 3? I'm not going to put it past Bitcoin, right? But we will cross that bridge when we get there. At the minimum, I am expecting us to hit about 147,000, around that $147,000, $150,000 Bitcoin, right? Now that's the macro view. Now let's go ahead and take a look at what are we playing around with, right? If we are considering, let's go ahead and analyze this current structure that we have here, right? What can we expect for price action within the next 1 or 2 weeks? Well, let's go ahead and turn on our Elliott wave analysis here. Here we go. Right. So analyzing this structure, we have a 1, 2, 3, 4 potentially in, waiting for that wave 5 to finish. Right. So what can we expect in terms of price if we were to get a right translated 60-day cycle? Right. Well, in terms of price, what you are taking a look at, right, if this was your wave 5, all right, is anywhere between that 0.382 to 0.618 fib extension, right? That takes us anywhere between 117.7K to $137,000 Bitcoin. All right. However, the question is, and this is something that I've been playing around and I've been discussing with one of my mentors, is that are we indeed finished with this wave 4, or do we still have more downside action to go, right? So we do have our bullish targets for the remainder of this quarter, right? Anywhere between 117 to $137,000 Bitcoin. However, what is the bearish scenario for Bitcoin, right? Well, let's go ahead and get a little bit more granular. Go down to the 4-hour. Chart. So your bullish scenario, right? The bullish scenario for the bulls out there is that your wave 4 is already finished, right? However, in your bearish scenario, your wave 4 is actually not in just quite yet, right? What we are taking a look at here is your alternative bearish scenario is as follows, right? You have your A wave already in, right? Your B wave yet to come in, right? This is what we're waiting to finish out here, right? Your B wave, and then your C wave to finish off, right? And so
Jay,
for the bears, right?
Why'd you call these A, B, and C and not 1, 2, and 3? Give us the difference there.
So when we're talking about corrective patterns, right, they are labeled using letters, right? And it doesn't matter if the corrective pattern happens during an uptrend or it happens during a downtrend. A corrective pattern, right, which is correcting for the prevailing trend, in this case, we're in an uptrend, are always labeled by letters, right? A, B, C, W, X, Y, W, X, Y, Z, et cetera, right? So that's the distinction between impulses, which are labeled by numbers, right? Motive waves, and corrective structures, which are labeled by letters.
Gotcha. Cool. Right on. And then I see you've got your wave 3 labeled there. Why would it not be up at the higher peak? Is there any reason? You see our purple wave 3?
Mm-hmm.
There's like a higher peak after it, right? Why is it back a bit further? I'm just curious. Like, why did you pick that spot?
So the reason, in order for me to give a detailed analysis of why I put the wave 3 here, we would be spending quite a considerable amount of time here. And the reason for that is when you make an analysis of the subwaves here, right? Because when you go lower and lower and lower in time frames days, right? You can always count impulses and corrections as you get more granular, right? And then where you determination of your impulses and your corrections are going to be determined by how the structure of this of the movements go, right? Of price action goes. All right. So that's the TLDR there.
Cool.
Right? Maybe sometime in the future we'll do a more detailed analysis of Elliott wave, and then you can see why I labeled my wave 3 here and not on top of there. Right.
Cool. Sounds good. Thanks, brother.
Of course. All right. So back to the bearish scenario. What can we expect for price targets in the bearish scenario if our corrective structure has not yet completed, right? If the wave 4 is not yet in and we are waiting for this structure to mature, right? So if we take a fib extension, right? take it from the start of our wave A to the end. Right. To the top of your wave B here, currently sitting at, I believe we got a new cycle high today for Bitcoin. We had about what was the high for today's candle? A high of 102,760, right? Then we can expect this wave C to extend, right, all the way down here to about, I would say, 87,000 is my main scenario, right? That 1-for-1 extension is a very common extension for this kind of corrective pattern, right? However, it's not uncommon for, in this case, we're talking about a flat, right? It's not uncommon for flat patterns to extend all the way up to the 1.236, even all the way up to the 1.618 fib extension, right? I don't think we get that low. I think 87,000 here is actually at the very bottom of this horizontal support, right? Before there's absolutely nothing below it. And so I expect a lot of bulls to come in and buy a price here at around $87,000 Bitcoin, right? Which is basically the last leg of horizontal support that we have within this range that we've been trading in since basically November of last year, right? But if we do lose it, is there a possibility that we head all the way down back to sub $80,000 Bitcoin? Yeah, absolutely. Because there's no support between 87,000 and then back down here at about 73,700 Bitcoin, right? And so if the bulls want this market to remain bullish, then you're going to have to come in and put in some heavy work supporting price here at about $87,000 Bitcoin. Right. So if we get rejected around here, right, around this current price at about $102,000 Bitcoin, and then we start falling to the downside, then the bearish case for this wave 4 becomes that much more likely, right? And it becomes more likely if, as Zenith mentioned, right, this month of January is gonna be pretty pivotal, right, to determine whether we're going to get a bullish next few months or not for Bitcoin, right? Because we have the FOMC minutes coming out on Wednesday. We have labor market data coming out on Friday. The following week, we have CPI numbers, right? CPI comes out month over month, year over year CPI, core CPI, right? There's also the Michigan Consumer Report coming out. And then obviously at the very tail end of January, we're getting the first FOMC meeting of the year, right? So if all of those numbers come in neutral to bullish, then we can expect within a reasonable degree of certainty that we're going to get a right translated cycle for Bitcoin. If those things come in bearish, then people are going to reinforce the sentiment that the market felt during the summary of economic projections that we had during the FOMC meeting in December, and that is going to more than likely bring us back down below $90,000 Bitcoin. I know that's not what everybody wants to hear, right? But you can see exactly how like the labor market data, right? How the economic outlook coming from the Federal Reserve can really shift market sentiment that quickly. Right. So you can't ignore those things when you're like, as a trader, whether you're a day trader or whether you're a swing trader, you cannot ignore those data points, right? Because Jerome Powell is one of the most powerful human beings on the planet. You can see exactly what the FOMC can do, what the market can do in response to a very hawkish FOMC, right? And hey, I know Jerome Powell gets the heat of it, but remember, the summary of economic projections is I believe all 19 participants of the FOMC, right? So it's not just him, right? He's just basically giving you the data that the rest of the committee members came to a conclusion to, right? So pay attention to those particular numbers coming in during the month of January, and then that will very heavily determine where we're going to go for the rest of this rest of the 60-day cycle. And that basically does it for the Bitcoin analysis. Z, Days, Track, if you guys have anything to add, please do so.
Yeah, look, I know you mentioned that they can shift sentiment. I think it's going to be interesting to see how they interact with the new administration that's coming in. They're supposed to be apolitical, but I think to say that U.S. monetary policy doesn't affect their job is also a little silly. And so it's going to be an interesting first couple of meetings as the new administration shakes hands with the Feds, and we'll see what comes of it. Like you said, I think these two in particular will be very monumental towards sentiment moving forward into the rest of the quarter and on into the year.
Agreed. Yeah. So, and it's not a lot to keep track of, right? You have the dates, and you have basically what, 2 to 3 important data points coming out over the next 3 weeks to watch out for. So it's not like you're keeping track of a whole bunch of numbers, right? You're keeping track of three different press releases and one big meeting, right? So.
True. Only final points I had for you is I agree with a lot of what you're talking about, especially some of those support levels on the lower side of things. So just doing a quick fib retracement. We got, excuse me, I think I got it the wrong way, actually. Boop. Voila. Our 618 level was pretty much right there at about 92.5, where we saw a good amount of support and a little bit drop below. Right below that, we have that 87.5 level you're talking about as well. And then outside of that, I was looking at that 90,000 level as an area that might also be able to be defendable, so to speak. But overall, I think that, again, once we start breaking that 87.5 level, there's not a whole lot below that until you start getting back down to maybe the previous cycle high of about 73,000. But at this point, that seems very, very, very bearish. So I'm not really on board with that train. For everybody that caught the show yesterday or last night, one of the things I talked about is that this candle right here is one of those verifications I was looking for that we are in a new cycle, because this candle was what broke above the previous swing high. That is the indicator for me that is my final confirmation. Yep, we are in a new cycle. So we ended up with a 50-day cycle with a day 43 high. Nothing too crazy. I was hoping for maybe a little bit more of a right translation and extending a little bit past day 60, but because of the strong move off that bottom, that's what leads me to believe that we have that 60-day cycle confirmation like Jay talked about earlier. Only other two tools that I was looking at here is our daily moving averages, is that our 20 daily moving average actually fell below our 50, which means our short term is technically lower just by a hair right now of our medium term indicator. So could indicate maybe a small retracement coming, or we're just going to wait for that 20-day moving average to catch back up. But an important note is we are well above any of our long-term average indicators. So the one I have up right now is our 140-day, aka your 20-week moving average. And then if we want to shift that over to the 200-day moving average, you'll notice we are still well above that as well. So as far as the bull market, yeah, bull market's in full effect. And then the final indicator for me is relative strength index. So that's down here. I was looking at these previous, these lower lows that were continuously happening towards the end of the cycle, but we broke well above it. And we even got back above this peak that happened on the 25th, which again, the latest swing high, and we're well above it, which confirms new cycle. So with that being said, I think this is a good dovetail into Ethereum because I see something different happening over there. Starting off with the RSI, instead of seeing those consistently lower lows, we're actually seeing higher lows because we have the one on the 22nd, we have the one on the 27th, and we even have one on the 31st. So that's showing a bit of a strength on Ethereum side of the house. And then additionally, we have another bit of an oddity, which is that the 20-day moving average is now below the 50-day moving average, despite what appears to be some strength in the market. As far as what's going on with Ethereum, though, is that we're trying to reclaim this high of about 4,100. And then once we get past that, we're going to start moving into price discovery, and we're going to start experiencing a bit of that euphoria for Ethereum that has been severely lacking for all of 2024. So it only took a full year. It only took a new turning over the year for Ethereum to get some wind into sails. But I think that we might be seeing a new all-time high for Ethereum coming up in Q1. If not continuing on later in the year as bull market really gets into that blow off top. But as far as levels going on, this 36.5 to about 3,800 region, I think that's a critical region. We've seen the price get rejected off of it previously, and we've also seen it try to hold as a support level, but just continuously fail. So we can get through this area that's right around 3650 to about 3,800. I think we're going to be able to move to those higher levels. Gentlemen, any thoughts?
The only thing that I would actually add to Z's analysis there is, so we were talking a little bit about this in the green room. For the first time in a very long while, the cycles for both Bitcoin and Ethereum are misaligned, right? Ethereum had a wick on day number 46, and it did not go much much lower than that, right? So I have my cycle low for Ethereum at day number 46 versus Bitcoin, which was, I believe, day number 50. What was my Bitcoin cycle low here?
56.
My Bitcoin, yeah, day 56, right? So Ethereum has its cycle low 10 days prior to Bitcoin getting its cycle low, right? So at this point in the market, am I surprised that Ethereum is somewhat holding up much better and a bit stronger than Bitcoin, right? Kind of front running the 60-day cycles. Not surprising considering the fact that we are in the post-halving year, which is the time that you expect also start really running. So there's that. And also, if you Z, do you have ETH Bitcoin by chance?
I can grab it.
Paul Sachs here. The chat has a question when you're done as well, Agent J.
Sure.
Bitcoin divided by ETH.
So this one is this. So the chart that you have here is Bitcoin ETH, right? I was looking for the inverse, but let me go ahead and share my screen with you, Z, because this is the other chart.
This one.
There we go. The ETH Bitcoin chart, right?
You want daily or weekly?
Let's go daily.
Okay.
Let's go daily. This one, the daily looks prettier because you get a lot more data points to look at. What you can see here, right? Even though we made another move down, right? We failed to kind of keep that 0.04 level for ETH Bitcoin, guys. What you could see here is that ETH Bitcoin made a higher low, right? That's really the most important thing. In some charts, ETH Bitcoin did have a double bottom, right? The double bottom is usually a very, very, very bullish pattern for those of you that keep an eye on it, right? When altcoins make double bottoms against Bitcoin, there is a tendency for it to start running heavily, right? A few altcoins did this. I believe Cardano made a double bottom against Bitcoin. XRP made a double bottom against Bitcoin over like the last few months. And then that signaled a massive move to the upside. I mean, you guys are fairly familiar with what Cardano did and XRP did over the last few months or so, made significant amount of gains. XRP even taking that number 3 spot by market cap just recently, right? Totally overtaking not just Solana, BNB, but even USDT, right? So this type of chart pattern, right? The double bottom in some of the charts that I was looking at for ETH Bitcoin, and even in this one, right? It's a higher low, which is what you like to look out for when you're looking for trend reversals, right? ETH Bitcoin has been a sad chart to look at over the last 2 years, right? It had a peak, it had a high during the merge, during the bear market, right? But since the merge, Ethereum has been down and to the right against its Bitcoin valuation, right? And it's really hurt a lot of the ETH holders. And it's also really hurt the sentiment for Ethereum for the predominant part of this bull market, right? Crypto Twitter is not short of people shit posting about Ethereum, right? Like, stop, it's already dead, leave it alone type of shit posting against ETH, right? So the fact that we had a higher low for Ethereum, right? It's showing signs of life, right? If we would have swept the lows heading into January, it's well within the timeline for when we can find the bottom for ETH Bitcoin, man. But I wasn't looking forward to it, right? Because goodness, if Ethereum swept the lows during that move after the FOMC meeting on December, the altcoins would have had a painful time of it, a really bad time. So I'm glad to see Ethereum holding up against Bitcoin. So bullish for Ethereum for 2025.
Agreed. I think it's finally Ethereum's year, and We're going to start talking about altcoin season later on in the year, in my personal opinion. But as far as the rest of the L1s and the major players in the space right now, I think they could see some good movements in this first quarter for sure. All right, gentlemen, any final coins we want to get to before we start talking about the Fed? Nope. Very well. That being said,
Paul's got this question about Paul Sack says, there it is. How much does the old moniker, a president's first 100 days performance / promise fulfillments, play in an overall market sentiment? Any effect on BTC pumpage? I think so. I think it's going to be a very defining, like these guys both are leaning towards a right translated cycle. And if we just turned over a new cycle, that means we should be pumping, harder after he's been inaugurated than before. Is that right, gentlemen?
I would agree, because look, 100 days, if that is the number that goes around in this quote, if it is 100 days, 100 days from inauguration puts us at the very tail end of Q1, early Q2, right? And Twinkies in the chat, we've been talking quite a bit about the different types of analysis that we perform, right? And the conclusion that not just me and he has come to, right? Now, other analysts, I'm sure Zenith has something to say about this as well, is that if we do get a truncated bull market in terms of time, then early Q2 is when we expect it to happen, right? It could be the top or it could be a top, right? And if during the first 100 days that Trump is in office, he fulfills even, like, let's say 25% of the promises that he's made to the Bitcoin and crypto community, right? And it doesn't even have to be the finality of those promises, right? It could just be the fact that he's showing us movement towards the end goal, right? That he's getting the ball rolling and getting things in motion, right? Because Senator Lummis can be as bullish as she wants for Bitcoin, right? And can get the ball rolling on the proposal for a strategic Bitcoin reserve. But until Donald Trump actually says something about the Bitcoin reserve, then, like, we like Cynthia, right? We like Senator Lummis, but she's not going to have the kind of impact on the market and on price in the way that Donald Trump saying something about it is going to have an impact.
I agree. As far as the 100-day idea, I believe this is actually a remnant from when FDR instituted the New Deal plan, because he tried to get it done in the first 100 days of his presidency. Then after that, it became the standard. There's also a bit of a cynical take to the first 100 days argument, which is that people are saying, oh, Trump has 4 years to enact his plan. And they're like, well, he really only has 2 years before the midterms. And, well, you only have 1 year before everyone starts campaigning for the midterms. And, well, if it's not done early, odds are it might not get done later. So, yeah, you get this weird sentiment, which is like, you got to front run this stuff as much as possible. As far as what's going on right now politically, based on what I'm hearing out of the House of Representatives, we had Mike Johnson just won re-election. Mike Johnson is pretty much Trump's guy on this kind of thing right now. Dirty little secret is that Speaker of the House position is a very powerful position, but it's also the worst job to have in Congress because, as we saw with the old Kevin McCarthy, you can get ousted at pretty much any time. And what we see here, though, is that Mike Johnson is very much in alignment with Trump. The other chatter that I've been hearing is that they're looking to do one large bill. Oh gosh, what was the name of the? It's a special bill that can really only get passed like once per Congress or once per year, effectively, which is supposed to help get through the Rules Committee, and you can do what Congress does, which is stick a lot of stuff inside of a single bill. And the reason that they do that is also because it technically has a lower threshold to get through Congress at that point. But a lot of the Trump agenda is looking at this point to get stuffed in one bill at the beginning. So it looks like there's going to be a good chance that Trump is able to effectuate his plan. And if that's the case, then I think we are going to see a continuation of the effect that we've already seen, which is that ever since the election, I think that the markets have been very optimistic about what's going on. And the only time that we lost that optimism was, as we're going to talk about later, when the Fed had its press conference and released their updated revision numbers for 2025, which showed a potential risk to inflation being higher than anticipated. As far as, maybe I should answer the second half of that question, though, which is any effect on Bitcoin pumpage. Yes, I think overall market sentiment is going to be something that affects Bitcoin pumpage. Bitcoin is still currently seen by traditional finance as a risk-on asset, in my personal opinion. Obviously, we have people like Michael Saylor who take a different approach, which is that that Bitcoin is a flight to safety as opposed to the US dollar and inflation. So that's my personal take, which is that when the stock market does very well, you're typically going to see a good correlation between Bitcoin. It does have the ability to decorrelate at certain points. However, more often than not, it seems that those two are in alignment with the direction that they're moving.
Copy that. Tracker, anything to add before we move forward, brother?
No, just to add to that, I think everyone, what everybody wants to see is crypto decorrelate from the market. That would be the best scenario for crypto to function on its own. But unfortunately, it really is, like Zena said, it is tied heavily to risk on, risk off assets. And unfortunately, TradFi now, especially with the approval of the ETFs becoming more and more consumed by a lot of people, a lot of funds have been liquidated into that. So now those VCs have a lot of push and pull to manipulate markets like they do with TradFi. And unfortunately, that's going to stay true until it doesn't. And hopefully with the new administration in place, I mean, you couldn't ask so far all the news that's been coming out on what they're trying to be such pro crypto, that if they, Zena said, if they even put a third of that into place, it should definitely put tailwinds behind a very bullish settlement for not just crypto, but for markets overall. The stock market did extremely well under the Trump campaign until, COVID derailed it basically. They were breaking all-time records for unemployment. Everything was running good because the country was being run like a business at that point. Like them or hate them, it was working as a business. So we should still see what happens. But yeah, it's something that I'm really hoping to see. I want to see this come to fruition, where we'll finally see, because of inflation, that crypto does well on its own because of the amount of inflation. That's always been the narrative. Has it been true yet? No, it has not. Still has not happened yet. I'd like to see it happen. That's all I got.
Fair enough. Alrighty, gents, let's move into the next bit. We got the good old Federal Reserve press conference that happened on December 18th, 2024, and we got some few good clips here for you. So with that being said, let's get into it. Let me know if you're unable to hear it, but I think we should be good.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling.
All right, there we go. It's a bit of a long clip, so I'm going to break it up real quick. First part that we got here is that at the tail end of 2024, we were anticipating the final quarter point cut, and we got it. So that dropped us down to about 4.25 to 4.5%, as the Fed likes to call it. But what we're talking about here is that there were a few anticipated rate cuts for 2025, but due to the revision of numbers, we're anticipating less rate cuts. And it's the the interest rate will remain higher at the end of the year than previously projected. The reason, number one, that Jerome Powell is talking about here is the unemployment data is suggesting that unemployment has cooled off to an acceptable level, which is about 4.2%. It's much higher, or it's a good amount higher, shall we say, than our very, very low of 3.6%, pretty much like 10 months ago. So since then, unemployment's been rising steadily, and it's starting to cap off and level out at about a 4.2% area. What Jerome Powell is saying here is that we don't need unemployment to go any higher in order to combat inflation, because inflation can either be caused by just an overheated market, or it can be caused by external factors. So this should help alleviate some of the overheated market concerns, but at the same time, they're still trying to make sure that jobs are being counted correctly and unemployment is being counted correctly as well. You might remember from some of the previous shows that the unemployment numbers or the job creation numbers have been revised down heavily throughout 2024, and especially as we close it out and we got the final numbers. So that is step one. Gentlemen, any thoughts on the unemployment rate as it stands?
Yeah, I mean, look, I understand that people are concerned that the unemployment numbers are above 4%, but like we've spoken about before, the unemployment hanging around that 4.2%, even slightly higher, is actually what the Federal Reserve, when taking a look at the labor market data, would consider normal, right? Jerome Powell has gone on record multiple times saying that, pre-pandemic, we were actually hovering around that 4% area and nobody gave a shit, right? Because let's face it, right? Things look much worse than they are when you take a look at an unemployment number that was brought down during the period of QT, right? And the period of massive job creation, right? Post-pandemic. But then you take a look at that number, start to gradually rise month over month over month over month. People are going to think, whoa, hey, now that's rising at a faster clip than what we're used to, right? But again, when you zoom out and take a look at what traditionally is considered a healthy unemployment rate, then 4.2% is well within those lines, right? So that's not something to really panic over, in my personal opinion.
Fair enough. All right, let's get into point number 2 from Jerome, which is inflation.
So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry.
All right. There we go. Straight from the horse's mouth. So
I love that they always lead with Gina.
Hey, I understand. I think she usually asks good questions, and she's well spoken. So, I'm a fan of hers. Inflation. Our last 2 inflation numbers that we had for the year over year were 0.1% increases month to month. So we bottomed out at 2.6, crept up to 2.7, and even crept up to 2.8. So that is a slight reversal in the trend that we saw previously, where we were struggling to break that 3.0 number and that level, but eventually we did, And we had a few good months of consistent downtrend, but the year over year, as Jerome Powell was talking about, it crept up a little bit. And again, the board of governors, the 19 people that put their input into creating the projections and making some of the decisions going on, they increased their risk profile for 2025. Why they did so, it's not entirely clear, but they just believe that there's a chance that there could be slightly higher inflation than previously expected moving into 2025. And that is what is driving their decision to project out that there's going to be fewer rate cuts in 2025.
Yeah. I would go ahead, Dace.
I would be curious. This is homework I haven't done. I'd be curious to observe the change in they assess the jobs data and then they go back and revise it, right? I would be curious the gap, like the size of the revisions during Trump's administration and then during Biden's administration, and then now we can compare, like, how, is there a difference in how much they're padding the numbers depending upon who's in power? That's not homework I've done, but just sitting here looking at this, it would be a curious thing, right? Zena just mentioned, like, we don't really know why they've changed their sentiment, but they have. One would hope that looser monetary policy that comes with a pro-business stance guy like Trump would entail more job opportunities and not less, which is one half of their dual mandate, like Powell just said. So I'm curious why the viewpoint would swing it the other way, right? I guess that it's not that it seems nebulous. Like I said, I would want to run the numbers and see the adjustments during his first term, because we have the data to look at. So that's something that occurred to me, and I am curious what the economic omnibus that's passed, like you said, Zenith, where we get a huge stack of stuff passed, and then we figure out what it means after it's passed. That's sadly been par for the course. I laugh. It's a horrible thing in my opinion. I have to believe that Trump and the folks that are going to be helping put that bill together, I know Trump's job numbers during his first term were pretty successful. So I'm curious how the Fed reacts to the new policies as they are released. I think you're going to see more reactions in the forms of some of this sort of shifting of rhetoric that we're seeing from that clip that you just showed. That's kind of my impression from what we've just watched.
True. So what I do have pulled up on the screen right now is the PDF document that is the summary of economic projections put out in conjunction with this meeting. So what we're looking at here is this table is comparing the projections from the last time they put out this document 2 meetings prior. It's not every meeting, but it's every other meeting. So changes in real GDP, we saw that they're expecting a slight increase in GDP in 2025 from 2.0 to 2.1. Unemployment rate, they anticipate being slightly lower, but inflation data, they're looking at as being 0.4% higher. So they were projecting that we were going to come out of PCE inflation for 2024 at 2.3, ended up being 2.4, and their target for the end of 2025 is 2.5 instead of 2.1. You might notice that there's a bit of an inversion here, which is that the trend previously was that inflation was going only down. The updated numbers that they have shows that there's going to be a slight uptick for next year before it goes down again. And then to switch over to the tab that we're talking about here is what we see here is that trend is shown by this chart, which is that it's very hard to tell, but this little segment of the line right here, that is actually slightly up as opposed to the previous one, which was only down. And what we see with the actual assessment of risk is that the uncertainty about inflation is that it's going to be not broadly similar, but higher. And again, this blue dotted line, that's our September projection. And the solid one, that is what we have for this projection. And then additionally, the risk to PCE inflation is it was broadly about the same previously, but it's been moved to weighted to the upside. So no weighted to the downside. If anything, the vast majority of the people providing input into this assessment are saying that the risk to inflation is actually to the upside as opposed to staying broadly similar, which they had previously suggested. Again, if you go down to the core PCE inflation, these are very similar things. They're just talking about core inflation instead of the all-encompassing inflation. So, gentlemen, any thoughts on the updated risk profiles?
Yeah. So I don't see how inflation is not going to start coming down. The last 3 to 4 presidential candidates have been printing money and at an alarming rate. So until that stops, I don't understand how that's going to stem inflation. And I get what they're calculating for inflation. We all know the real inflation is probably somewhere around 15 to 20% because how they're cherry picking what goes into the calculations on it. I'm not trying to derail the conversation what we're seeing, but I'm just trying to, if you ask anybody who's living in the real world, inflation is a lot higher than 4% on what they're projecting, but we get it. They're picking what they want, and that's what Dace was saying. How much are they padding the numbers essentially? So it would be interesting to see what they're picking during that time. To go back what you guys said originally, under the Trump administration in 2018, unemployment was 3.9, 2019 3.6, and of course it spiked to 6.7 during the pandemic. And then it backed down again at 3.9, 3.5, 3.7 under the Biden administration. So it all seems to be under 4% for most of the time during those 2 presidential terms. But the thing that Trump brings to it still is going to be a business friendly. He's going to give business tax cuts. He's going to do that. He's going to push it probably back down to 15% what it was. And that should definitely stimulate the businesses. And if he starts slapping tariffs like he's saying on imports, that should also benefit employment in a more less employment. The one thing that I don't know with all these unemployment numbers is how many people have fallen off, because obviously we know once they stop looking, they fall off of those numbers. They don't calculate them anymore into the equation. So how many people are actually unemployed in the United States? What percentage are we at? Because that chart is something I don't normally see. I'm not trying, like I said, derail it, but that's another thing that just for people that aren't aware of it. Once you stop looking for a job, they don't calculate you any longer into the unemployment calculations. You just kind of fall off. And a lot of people have given up on finding jobs in certain areas. But I find it, I still come back to it. I mean, Trump is a business savvy person. He's going to pump this thing. But under his administration, he still printed a bunch of money too. So is inflation going to, I don't see inflation coming down unless they take a drastic stance. So that's my 2 cents.
Very true. By the way, here's a quick chart of what you were talking about there. This is the civilian labor force participation rate, seasonally adjusted. As you can see, back in early 2004, we were at about 66% of available people that were able to be in the workforce were. And we obviously have this massive dip that is COVID, where we got all the way down to 60.1. And now we've crept back up to 62.5. But the rate that we're at right now is still very, very much lower than we were at in the previous 2 decades. So what you're saying is absolutely true, which is that labor force participation, historically, down. All right. So, final clip. We were talking about administrations and how there might be a change in policy. Jerome Powell actually gets asked that exact question. So, here we go.
Howard Schneider with Reuters, and thanks for the opportunity to ask a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I'd say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that.
All right, there you go. So what I took away from that one is there's two major points that he's talking about here. Number one is higher expected growth. And then what almost feels conversely to that is the idea that there's also higher uncertainty. So the uncertainty can come from the fact that we don't know whether or not the administration is going to be spending a ton, although hint, Donald Trump is a big spender. It used to be a dirty little secret, but I think people just understand that now and have accepted it. So that could be one of the causes for the rise in uncertainty. The other half could be how international markets respond and what else is going on internationally that's going to affect U.S. markets. But the other point, the first one that I mentioned, is anticipated growth. So as we looked at the numbers, we're anticipating a little bit more growth in 2025 than we were in 2024. And that led to another point that he talked about, which was the neutral rate. The neutral rate is this theoretical idea. It's the theoretical rate that the Federal Reserve should have set, that not should have set, but could have set, that would neither decrease economic activity nor increase economic activity. It's that perfect middle ground. So what he's talking about here is because we have increased uncertainty, but we also have increased growth, what we believe is that the neutral rate, or where the rate needs to be to not do neither of those things, has actually increased a little bit in his mind, which is where he's coming from. So yes, are we harping on an increase in inflation risk? Yes, for sure. We don't know that until the data comes out. But the other thing is that we have projected growth as well, which means that is one of those reasons why they're slowing down the rate cuts in 2025.
Yeah. In a very short clip that basically explains, earlier you said that we don't really know the exact reasons for their policy decisions, but when it comes to the Federal Reserve, I think like Jerome Powell said, right, when you're coming into the administration, a new administration, and there's some uncertainty in how his economic policy will affect not just us nationally, but how international markets are going to react and therefore affect us as well, then for an entity like the Federal Reserve, the reaction is always going to be to take the route of conservatism, right? And so that's primarily, I believe, one of the key reasons why they revised their projected number of cuts for next year from 3 down to 2, right? Because there's still significant uncertainty in the market when it comes to what Donald Trump's policies are going to be and how that's going to affect the rest of the world. He also mentioned the fact that growth over the latter half of 2024 was a lot faster, right? And so what happens when you have that kind of significant growth heading into 2025? Well, more growth means that the economy is growing, right? He mentioned that GDP 2.5% during that year, 2024. However, more growth also means people are spending more, right? Companies are spending more, employees are getting paid more, which means they're spending their money, right? Because they have expendable capital, which inherently means that it's going to have an upward pressure on inflation, right? Which is probably the reason why we also see, even though small, right? We're talking about like fractions of a percentage point here, that we had those increases in inflation over the last two reports, right? And so when you have those kind of readings, strong economic growth over the latter half heading into 2025, you have inflation numbers slightly going up, you have uncertainty in Donald Trump's economic policy. And like Z said, right, uncertainty in some sense, right, because we don't know Donald Trump, like where he, like what angle he's going to play. But in general, we know that even though, he's conservative, both sides of the aisle like to spend money, right? And Donald Trump is not shy about spending money, right? And so you combine all of that together, and if I was a participant, right, if I was one of the 19 committee members, I'm going to err on the side of caution and say, okay, strong growth, latter half, heading into next year, inflation's creeping up, and then Donald Trump is going to spend. His spending is probably going to affect the rest of the world. We don't know what his other economic policies are going to look like. We're going to err on the side of caution here, right? If you look at the breakdown, of where all 19 participants fell, right, in terms of should we increase this meeting or should we not? I think another one of the reasons why the market got rattled was because it was basically a split down the middle, right? Whether they were going to increase or not during the December meeting, right? So it could have gone either way. They could have been like, well, more than 50% of the participants says we're not going to increase. So, or we're not going to decrease the rates. So we're going to hold it steady here, right? So the fact that we came that close, right, that down the middle, to whether we got the cut or not, probably also spooked the market. But based on what he summarized there during that little clip, it makes sense to me why they're taking a more conservative route. And that's why we really need to pay attention as to what the numbers are going to look like during the month of December. That's reviewing the numbers from December, the month of January, reviewing the numbers from December, right? Because if those come out a little bit better than we've had, then we can be more confident that, right, they're gonna sometime down along the line, those projections are gonna get revised once again, right? Because remember, for the entirety of 2024, right, during the first half, they were like probably one cut this year if we get lucky. But as we got further and further down along the line, one became two, became the total of three, right? So this is not like the meeting in December is not the final nail in the coffin of the bull market, right? It's just a small bump in the road. It's just the Federal Reserve being a lot more conservative, as they should, right? They should be more conservative because they handle the money. So
this might sound kind of crazy, but based on those two data points we talked about for that last clip and what you're talking about here, which is possibly more inflation, but also possibly more growth, I think that both of those are actually combining indicators to show that crypto is going to do very well in 2025 for two reasons. Number one is if we have growth, people are going to be more willing to take risk on assets. And there's also the true DeFi believers out there that believe that Bitcoin is better money. So if we continue to see higher inflation, it might trigger something in people's brains, which is, I need to get out of US dollars. Might as well go to the thing that's also performing very well.
Yeah. And to kind of one last thing that I really want to mention, this is something that we haven't spoken about in a while, but remember, one of the key factors that contributed to the massive rise in inflation during pre and post pandemic was that we had those like blockages in the supply lines, right? And if you have high demand, but also not enough supply to meet that demand, right, whether it's in goods or it's in services, then that's going to be like a double whammy, right? Because whatever left is there, then whoever is manufacturing that good, whoever's providing that service, has carte blanche basically to charge a premium on that good or service. So during Trump's presidency, if we could get some of those like blockages removed from like the supply lines, then I think that's going to help balance out the high demand because there's going to be more supply coming into the market in the goods and services. So I think that's one thing that we also got to take a look at.
Agreed. Gentlemen, let's go around the horn, give our closing thoughts on the Federal Reserve stuff.
Sure. Yeah, look, I think what Steele's saying is that markets hate indecision, right? Feds effectively speak for the markets. You know, I mean, they're speaking for the status of the bubble that the markets operate and live and move in. And so they're a bit of a barometer for the market. Sometimes the market tells them what to do, and sometimes they say, hey, market, we think this. This is an instance of them saying, hey, look, we know it's going to be good for the markets, but we don't, it's indecision. And so we're going to revise and be conservative, right? We're going to play the conservative card, like Agent J has highlighted to me. That's the takeaway from this, in my opinion. I think it's the interim, right, between two administrations. It makes sense to be conservative.
Yep.
Tracker, what you got?
Not a lot that haven't already beat up on, but basically, yeah, buckle in. It's going to be an interesting couple of weeks, like you guys said. I mean, period. There's going to be a lot of good data points coming out. I still think, like you guys said, they're going to tiptoe. I mean, Jerome Powell said it himself, and it's foggy. Can't walk around with a dark room with furniture. You're going to is going to be very careful walking through this. And I think that's the appropriate stance. And you're switching over to a new administration, like Dave just stated. There's no reason for them to get anything aggressive right now. It'd be silly and reckless to even try to do it. So you just let it come in. Let's see what the numbers are going, and let them kind of change. Let them handle it as the data points are coming in. With that being said, even though I'm still bullish for the year, I still think you're going to get these bumps. You're going to get these hits, these unexpected moves. Like, it was crazy to me, like the move that we saw that down, how it dropped so bad in December, that quick drop. They decided, what was the overall census? Was that instead of 3 cuts, they were going to do 2 instead of 3? I mean, is that they were thinking that, and that's what caused the shock in the market? I mean, it just seems like the market had just needed a reason to sell. So I think we got overheated. So I think overall, the market pulling back was a great thing, because it was running a little hot. It was definitely running hot. So that pullback kind of allowed it to cool off, allowed us to digest and go up. And I think it's going to be more sustainable on the long run. I don't want to just see massive quick moves to the upside, because then there's going to be opportunities for people to take money, causing the down. It's going to be more volatile if it does that. I know I'm kind of blending a lot of things together, but ultimately, yeah, buckle up. It's going to be interesting. Q1, this whole year is going to be interesting. New administration, but everything you've heard is very pro crypto, and I think we are definitely going in very uncharted territories now. God, would I love to see Bitcoin decorrelate from the market? That would be the ultimate gift, but we shall see.
Very true. Alrighty, to give some numbers that you were referencing there, by the way, the projected federal funds rate, according to the previous projection, was 3.4% at the end of 2025. That would be 4 quarter-point cuts that were previously anticipated. Now we're down to 2, and the anticipated rate is going to be 3.9%. Additionally, for 2026, they even updated those numbers as well, and it was going to be 2.9, but the revised numbers are 3.4, so another whole half percentage point higher. That is what we got. Outside of that, though, let's take a look at what else we got on the economic calendar. So first up, this is the Federal Reserve website. We're looking at 2 Fed meetings in Q1. We have one coming up at the end of January, as Jay alluded to earlier, and we have one just after the Ides of March on the 18th and 19th of March to close out Q1. So we got 2 FOMC meetings coming. And additionally, our projections, thanks to the CME group with their FedWatch tool, 22 days to our next one, by the way, we are looking at a 91% chance of no change. And there is a 8.6% chance of a quarter-point decrease. Again, for the folks at home that don't know, this is a tool that aggregates the probabilities thanks to the futures markets, where the futures markets actually show how people are placing theoretical bets, or where they're putting their money, so to speak, about what they believe the future is going to look like. So that is the January meeting. And for March, we have a 56% chance of no change, and we have a 40% chance of quarter-point cut.
Bless you.
Sorry. Microphone really picks up everything, huh? And then additionally, we have this tiny sliver down here for a half-point cut, although I believe that the people that probably are going with this one are also a contingent of the people from the previous one that were looking at about that 8.5% cut as well. So overall, I think in the next 2 meetings, we're probably going to see that quarter point cut in March, because the way that it works out is that we have 8 meetings per year, and it pretty much means 2 per quarter. So I wouldn't be surprised if we see that one in March. The May one is also showing very similar percentages as well, and it's looking a little more split between the no change and the ease. I think March is a little more according to the timeline that was previously laid out. Again, Jerome Powell's going to keep looking at the data like he loves to harp on. And speaking of data, here's our scheduled release of consumer price indexes. So we are pretty much right here. This is going to be the next one. So we're going to have one CPI report between now and the next Fed meeting, and then we're going to have two CPI reports between that one and the March one. As far as the employment situation or the unemployment numbers, we're going to have very similar things again, which is we have one coming up at the end of this week, and then we have two more before the final one. Sometimes the way that the numbers work out in the Fed meetings changes up, but thankfully we have these guys on the similar schedule, so to speak. Gentlemen, any other stuff for the upcoming calendar you want to mention?
No, sir. That pretty much covers everything. And if there's anything else major that happens down along the line, then you'll hear it here first.
True. I do have one small data point I want to mention because, Jay, the trend was broken, and it breaks my heart.
It does also break my heart.
For the folks at home that don't know, we're looking at CoinGlass. This is Bitcoin monthly returns. The thing that we're talking about here is December closed just a hair red, which is unfortunate, but I think it might just because November went so well that the starting point for December was just a hair too high. So the trend that we're talking about is that typically whenever September is a green month, you get 3 following months of all green months. We saw it back in 2015, 2016, saw it in 2023, did not see it in 2024. We were so close, but just eked out by a hair.
Yeah. And, they said this time it won't be different, but it was. Like I mentioned earlier in the stream, this is the first halving year that we've had where December did not close green, because in 2016, right, all green for Q4. In 2020, all green for Q4. And in 2024, shot to the heart, minus 2.85%. I blame Jerome.
Yeah, thanks, Jerome Powell. It's all your fault. He ruined Christmas. No one else, just Jerome. Alrighty, gentlemen, we have 2 articles we can cover really quick. First off, we have from Cointelegraph, crypto venture capitalists reveal what they're looking for in 2025. We covered this on the show yesterday for DGen Roundtable, but I wanted to bring it up here because I think it gives a little insight as to what some of the larger markets and what the investors are looking forward to. And if we go down here, we see that real world asset tokenization and emerging markets, including stablecoin usage. So we talked about this a little bit in the green room, but let's keep that conversation going here, which is that it's not really possible to make money off trading stablecoins because it's a stablecoin. But who do you guys think are going to be the winners when it comes to the stablecoin increase in 2025?
I would think it's going to be Tether. So right now, obviously USDC still has a bit to catch up to, some catch up to do to get up to that Tether market cap. However, because of what's happening over there in Mika, it seems like Tether is losing some ground, right? Coinbase has already delisted Tether in their European sectors, right? And other exchanges that are trying to get a foothold in the European Union are also following suit. Now, Tether does have some wiggle room in terms of whether they're going to be able to set up a structure that's compliant with MiCA regulations, yet to be determined. And so if they're not able to, then they're certainly going to lose a foothold in the stablecoin market. But until that happens, I am not going to assume that USDC overtakes it in terms of market cap. I still think it is going to be Tether, because Tether is the most widely used stablecoin in all over the world. So, but I mean, it makes sense why VCs are flocking to stablecoins, right? Because, all right, stablecoins are what's going to be generating the most number of fees, right? Every single major L1 needs a stablecoin. Cardano, please catch up. And that's where people park a lot of their money, right? They put it in farms, they put it in LPs, right? And the liquidity provider, their stablecoins, in order to generate that yield. And so because that's where people park a lot of their money, then it makes sense that venture capitalists, right, like this article alludes to, why stablecoins are where that money is going to be heavily invested into.
Fair enough. Dace, Tracker, any platforms you think that you think will do very well with the stables?
I think you're going to see a lot of new players in that space, right? I think you could see big transactors, right? I mean, PayPal USD, right, is a new property out there that's within their own little sphere. I know that there have been rough announcements about an X payments platform that Elon has launched. I'm curious if he's going to be directly participating with Coinbase, right, and just integrate USDC. I could see that happening. I could also see him launching his own, depending upon how that conversation goes. I think we're going to see a lot of interesting new projects around the stablecoin principle and, like Jay said, earning yield, right? I think that narrative and that focus in our sphere is going to come back into prominence as we move through the bull.
I like it. Alrighty, let's get to our final article. So we talked about what the investors are looking for. Let's see what the industry is up to. So we have 75% of Ripple's open roles are now US based. We have a quote from the CEO. It says, "This is even more personal after Gary Gensler's SEC effectively froze our business opportunities here at home for years." Keeps coming into it. He says, "Team Trump is already jumpstarting innovation and job growth in the United States with Scott Bessent, David Sachs, and Paul Atkins and others at the helm. And they're not even in office yet. Say what you want, but the Trump effect is already making crypto great again."
Yeah, well, it would have been nice if your co-founder actually did not donate to Kamala and instead donated to Donald Trump. But hey, let bygones be bygones. They did. I think recently Ripple made a sizable donation to the Donald Trump team. So kudos to them. I like the fact that they're U.S. based and that most of their positions are held by United States citizens. I really like that because go America. And I like that he's still taking a shot at Gary. Look, it wasn't just the SEC, right? There's a few articles that came out over the past week that so a lot of this was from Coinbase, right? That they're publishing a lot of those FDIC cease and desist letters that they got over the last few months, which is why accounts have been frozen. Banks have had issues with crypto transfers, right, from exchanges back to the banks, right? And so as much as we like to bag on Gary Gensler, it hasn't been a singular entity that's been trying to come after crypto, right? There's been other players in the space that have also tried to put a gear in the wrench from turning within our space. And so the fact that all of that stuff is out of the way, slowly but surely, a lot of the roadblocks are being moved out of the way. You might not be a fan of Ripple, but at the end of the day, they have been fighting the good fight, fighting for not just themselves, but obviously for the rest of the market. Because look, if they just packed up their bags and went home, am I going to say that we would not have been able to push through the SEC and company? I'm not going to go ahead and say that because a lot of people did take up the fight along with them. But remember that they are one of the first large entities to actually put their foot down and say, no, we're going to fight this. We have the purse to fund it. And my goodness, they went in an extended legal battle, right? And very, very few companies can throw hands with the U.S. government and not just come out and profit at the other end of it, but actually still thrive. So, kudos to them.
Fair enough. To fill the conversation and article gap here real quick, I think what this article is showing in particular is that the market is actually responding to some of the promises of the Trump campaign earlier, which is that they want to bring the crypto industry back to the United States, and they're even talking about doing tax breaks for US-based crypto companies. And when you start posting that 75% of your jobs are US-based, it seems to me that you might be trying to make the argument that, yes, we are a U.S. company. Tax breaks, please.
Yep.
Yeah, Zenith, I'm glad you brought that up because it's interesting. Like countries and borders are no longer visible now at this point, especially in the crypto game. And it's very fascinating here how you're seeing this all play out. So Gary Gensler, the head of the, he blocked, the head of the SEC was blocking Ripple and was just like their thorn in their side, trying to just hold them back. And that was where the largest lawsuit that was going on. Now we're past that. All the administrations were very anti-crypto. Now you have an administration coming in that's very pro-crypto. Britain is trying to become, they quote unquote, the crypto capital of the world. And yet Trump's saying no to that. And then you throw in other wrenches, how Ripple had partnered with the WEF back about 4 years ago, which is another, big entity that other big companies are associated with. And then now, you're looking at a very pro crypto environment with the Trump administration coming in. So there's a lot of power struggles going on right now. And I think ultimately, I don't think the countries and entities and businesses are trying to digest and figure out how this is going to play out. And I honestly, if you were to ask one person, I don't think even they know how it's going to play out. And I think people are just taking in the data points as we go through this journey of adoption to crypto. And it's going to be an interesting time to see how it unfolds. But I just think it's funny because Ripple seems to be right in the square of all of this action that's going on constantly. And like you said, I was going to bring up that point, but you already did it for me about, I think it just proves that it's there, that Trump's making it very clear. He wants to make it a very pro crypto. I mean, all the information that's come out with the new Trump administration and all the senator, congressmen, you name it, are screaming how pro crypto everything is. So a major power shift had just completely pivoted and shifted. And I think they understand. I think it goes back to they try to fight you and then they finally, then you win. And then other than that phase of trying to, how do they get their hands on this as much as possible so they don't give it away to other countries? The BRICS have already made their decision how they're going to start trading in non-US dollars for various assets around the world. That's the first time since, this pre-1970s that's already started. So I think they realize they better start getting on board and starting to, decide how they're going to play this game, because they can't sit idle and let countries like Dubai take over, because they've made it very clear they've been very pro crypto. Same thing with El Salvador, but Dubai's got a lot more money behind it. So I guess ultimately what I'm trying to say is it's interesting to see all this yin and yang and this tug of war going on, and then all of a sudden sides start to change which side they're on after a year or two. It's just fascinating to see it unfold, more or less.
Very true. All right, gentlemen, let's go around the horn for a final time and get your summary of the thesis, or what you are expecting in Q1 of 2025.
Look, I think things are going to change drastically on. They're going to pivot a ton between January 19th and January 21st. You're going to Gary Gensler resigns, Trump's in office. I think a lot of people's stances right now are in holding patterns, right? That's what we saw from Jerome. We're seeing holding patterns from lots of folk. We're seeing holding patterns from the RH community's favorite judge. People are waiting to have the new guard move in. And I think it's going to be I am incredibly bullish for Q1. I think a lot of people will get that way quickly after we pass those dates. I think that the month will turn on the pivot of that event. And really the whole quarter will turn at the same, that same event. Where it goes after that is going to be the fun part to watch. Like you said, we see the omnibus come out. We see if the feds update their projections, right, about inflation, or how they react and respond to the new administration. And so it will be very exciting into the month.
Tracker, what you got?
Just to tag on to what I've already said, I think it's going to be an interesting how Q1 plays out. And I think it kind of goes back to how I've always compared crypto to the dot-com bubble era, where e-commerce started exploding. People were throwing money at this stuff. They didn't know what to do with it. And then it crashed and then it came back. And I feel like you're in those, it's very eerily similar to what I'm seeing with crypto. A lot of parallels there. And I think this now with the administration getting on board should be, like I said, it's going to be a continuation and basically greasing the tracks for the crypto adoption. And it's going to be more interesting. The Feds are going to do what they're going to do, and the market is still going to be volatile, but I'm still very bullish to the upside long term. Are we going to have blips? Are we going to have major pullbacks? Yes. You got to be handling risk management as you go along this journey, of course. But it's going to be fascinating to see. The thing that no one's really talking about is what happens when you have major corporations all of a sudden get on board with the technology and start to leverage it. And you start to see all this non-sexiness of like infrastructure and how the networks work and all. Nobody cares about that. What they are going to be interested about is when you start to have the structure laid out and these businesses start to leverage it to actually go into real world applications where people can start to utilize these. That's going to be the game changer. And I think with this administration being pro crypto, you're going to start to see that evolve, and that's going to blossom new companies we haven't heard of yet. It's gonna be that could be like you're seeing it now with AI with NVIDIA exploding, but I think with other companies coming into this other realm, you could start to see the same similar action, because you'll see these massive growth projections that these companies can make. So I'm excited, but yeah, I think overall I'm bullish long term for 2025, certainly in Q1, but I think there will be some blips here and there, of course. But yeah, buckle up, it's gonna be fun.
Well said. All right, Jay, what you got?
I'm inherently bullish by nature, just based on the data that I see, based on the 4-year cycle analysis that we do so often. But I take it as it comes. I know everybody hates Jerome Powell because he's like, we go by the data, but that's I'm the exact same way. And so if the stuff that we're looking at for in January turns out to be like bearish, I'm gonna have to revise my own personal sentiment, right? But overall, bullish for Q1, right? Because it's a post-halving year. If you're not bullish post-halving year, like what the hell are you doing in crypto? Number one. And number two, I read just this morning that the FTX repayments are going to come out soon, which means that a lot of those people, if they're not gonna, because I mean they're gonna be paid out in dollars, right? In stables, I'm assuming. And so most of those people, right, if they're still bullish crypto, they're probably going to inject that capital right back into the market, right? And it's a pretty penny that's coming back to these people, right? Because they are, so if you guys remember, they're not just being repaid what they lost, they're being repaid like 100% plus change. Okay, so it's gonna be a sizable sum that can potentially re-enter the markets once those repayments start coming out en masse. So in general, bullish, but if the data turns to be bearish, I will also tell you guys that. But overall, bullish.
Fair enough. So I guess for my summary, I apologize if it seems like this is the Donald Trump show, because it's really not. It's just right now we're in a very weird position that we aren't even in every 4 years, but we're in it right now, which is that the elections happen in November and we're waiting for the inauguration in January. Until then, I think that we're still going to see a few more wrenches thrown into the system by the current administration and possibly some of the people in place. Gary Gensler, I'm looking at you. And after that, I think that we're going to really see a lot of projects and a lot of announcements come out. It's probably starting in late January, early February, of people making changes to their businesses or announcing projects based on changes that are made to the regulatory ecosystem, shall we say, and all the surrounding stuff going on. Again, I think it's going to be a big fight has been promised by the Trump administration for proposing new laws, new regulations, and everything that's coming down the pike. They got to get it through first. Until then, things are largely going to stay the same outside of executive orders and possibly changes to the regulatory state, depending on what Elon and Vivek do over at the Doge and how many people they recommend to be fired. But beyond that, though, when it comes to the actual crypto markets, the thing that I'm looking at is we are in, I still personally believe the 4-year cycle is in effect. Right now, we're still in that disbelief phase, which is that we're starting to see some pumps, but people are still very skeptical and they're like, not buying it this time. Where's that dip coming? But I think if you look at the market psychology chart, that's where we're at, and we're getting ready to go into acceptance and then full-on euphoric mode. And then after that, we're going to hit that top, and it's going to go down quickly. It might sound crazy to say, but we have six Bob Lucas cycles or 60-day cycles. That's literally 2-month cycles. So 12 months divided by 2, 6 cycles. I think that we have 3 probably guaranteed good cycles of continuing the bull market. And based on what I'm looking at, we probably have 5.5 before we hit that 4-year cycle, or the dirty secret is it's actually 3 years and 11 months. So I personally am anticipating the end of September, early October is where we're going to see that 5.5 cycle high. And after that, I think Bitcoin anyway, is going to start to recede. And then it's possible to see that altcoin season go wild and go absolutely like bananas for a few weeks after that. But as far as Q1, we're in that disbelief phase. I think that we're going to see a good pump here coming through January, and then I think that we're going to close out the quarter in March at almost the halfway point of another cycle coming up. So I personally think that I would not be surprised if Bitcoin hit about $130,000 by the end of March. I know that might even be a conservative number to some folks, but that's genuinely where I think it is. I think Ethereum is going to break all-time highs here towards the end of January, and I think that we're going to start to see a little bit of a mini alt season coming up, and I think that L1s are going to be doing very well in Q1. Outside of that, though, I think the overall economic condition is going to improve, and I'm very much looking forward to it.
Yep.
For sure.
Yeah.
All right, gentlemen, I do want to close it out with one final thing, which is that some of us, I think it's just me actually, but some of our friends will be attending the Hex conference later tonight. So if you're interested in that, hearing from myself, some of the other guys from the DGen Roundtable, and our good friends of the community, that is going on all week. And we're going to be closing it out on Thursday with some, again, all of our friends are going to be here. And I will be speaking with Nuclear Herbs on the first segment on Thursday, talking about legal recap of everything going on and the current climate of the space. So that is what we got going on. Show the boys some love. Other than that, though, folks, really appreciate everyone showing up for the stream and talking with us about all your Q1 predictions. We're going to go around the horn for one final time. Mr. Agent J, where can the people find you?
Oh, you can find me on Instagram at _P90Hex. Oh, wait, no, that's actually Twitter. On Instagram is agent _J Schroth. That's how you know I haven't streamed in a while, because I forgot the Twitter and Instagram handles, but those are the places where you can find me. You can also find me in our community Telegram over at the DGen Roundtable, where we are very active. You can catch us on streams here. We stream over at the DGen Roundtable Sunday, Wednesday, Friday, Tuesday Telegram calls with Dace, since he's back and from the very busy week of December. So those are probably going to start up soon as well. And yeah, as always, we know that time is your most valuable asset, and we appreciate that you do spend some of that time here with us on this wonderful Monday evening. Until then, Dace.
So you can find me on Twitter, X, and on Instagram at Dace Northall. Find me on in the DGen Roundtable Telegram. I host a call most Tuesdays when it's not December. Apparently, I've been very busy. I am back, and so we'll be back on there tomorrow at some point, giving you guys some more info in DGen Roundtable if you want some more in depth and some more DGen info and advice there. Yep. I'm at Dace Northall on all the platforms. You can find me there, see what I'm about there.
All right, Tracker, where can the folks find you?
Here every Monday on Walk the Block. That's where. And then on Telegram Tuesdays with Dace and Jay, and sometimes you get Zenith. You're in there as well. You can find us over there on the DGen side of the house, and of course we're in the Telegram chats like crazy. But and like I said, hopefully you'll see us more in other areas that we're working on too. So we got us.
Love it. All right, folks, I am Zenith. You can find me on Twitter and Instagram at ZenithDI. But more importantly, please like, comment, and subscribe to the show here, and check it out over on Twitter and Instagram. That is where you can find both of the accounts for Walk the Block. Keep up with all the news going on there and any juicy tidbits that we are putting out for information. But other than that, folks, we want to thank you so much for tuning in tonight. We know that time is your most valuable asset, so we want to make sure that we thank you for it every time you spend it here with us. And until we catch you guys next time, I hope that you picked up something good and put it into some good, effective use. All right, folks, good night.